Welcome back. Well, it's been a rush of new listings that we've seen over the last few weeks, and we've got Pranav Haldea joining us to talk us through really the outlook on some of these names as well. Pranav, thanks for being with us. In the recent spate of listings that we've had, and most of them have been really strong, from Happiest Minds, Roots, Rosari, etc. What's really stood out to you? What are some of the highlights?
Well, this year you're seeing record fundraising taking place, whether if I look at the IPO route or QIPs or rights. So essentially you're seeing, companies raising record amount of capital to shore up their balance sheet. The other key aspect to this is that, you have seen that after the March lows in the market, there has been a sharp uptick in the secondary market. And on the back of this bullishness, you've also seen a revival in the primary capital market. There is a lot of liquidity which is there and which is sort of driving, the oversubscriptions that you've seen in the IPOs which hit the market in September, and also the strong listing gains which were there.
Sure. But from the names, though, and given that they've had a phenomenal response, which are the ones that you also see as sustainable? Where do you feel the interest will continue to build?
Well, I don't comment on specific IPOs, but, given the sort of response that you've seen, and also if I were to, do a bit of a historical analysis in terms of the last 5 years and the IPOs which got launched, you come out with a very mixed picture. There are some which still are trading above the issue price, some are not. I personally have always believed that, after listing, any IPO company becomes like any other secondary market listed company, which is driven by industry prospects, the company's own financials, and broader market sentiment. So, it is, in my view, a bit unfair to hold IPOs to a test, let's say every 6 months or 1 year or 2 years or 5 years, and to say that, some of these IPOs performed well and these did not. Because after the IPO, like I said, they become like any other listed stock.
Pranav, would you say that investor this time around is more conscious about where they're putting their money? It's not like a blanket IPO frenzy which is playing out in the market. What we saw for a Root Mobile or for a CAMS or for a Mazgao Shipbuilders is not the same that we saw in the case for angel broking, for instance.
That's right. So one of the trends that you've seen in this year is that, you had the big IPO of SBI cards back in March. And of course, then the pandemic struck and there was a, lull for nearly 4 months till the time you saw, Rosari Biotech hitting the market. So one of the trends that you are noticing right now is that given what has transpired over the last 7 to 8 months, you are seeing, IPOs from select companies, from select sectors, which have not been impacted adversely as a result of this pandemic. In fact, some of them may have even benefited. So you're seeing companies from telecommunications, you're seeing companies from pharma, you're seeing companies from, the biospace coming and hitting the market. And, you're also seeing good response to these issues. But at the same time, you had an infrastructure company which came to the market, which had to then extend the date and also lower the price band. So, and even if I look at, going forward in terms of where we are in terms of the pipeline, so while there are about 27 odd companies which are sitting with SEBI approval, but if one looks at that list, a lot of them belong from sectors like real estate, from hospitality, sectors which we know have really faced the brunt of this pandemic. So I would not, be alarmed in case you do not see any of these companies launch their IPOs, even though they have the SEBI approval, and SEBI is also, as you would be aware, granted a 6-month extension to their approval timeline. You will continue to see deals from such sectors like telecom and pharma. In fact, if one just looks at the last week of September, you had 5 new filings from companies, including the government RailTel company as well, which is from the telecommunication sector. So, to answer your original question, you will see select deals from, these select sectors. And of course, investor interest would also be, focused more on companies which have, sort of not been impacted as a result of this pandemic.
The last three IPOs, one has seen almost 100% listing gains, Pranav. Is it really safe to invest? How stretched are the valuations for the new paper which has hit the market of late?
So you have, as you've rightly said, you have seen a surge in terms of retail participation. As we've also seen in the last few months, there's been, a flurry of new demat accounts which have been opened by retail investors. But look, from a valuation perspective, given the structure of the Indian market, retail can very comfortably follow the institutional investor queue. Because a lay retail investor may not be in the best position to assess whether the valuation is appropriate or not. At the same time, my word of caution to first-time retail investors would be that, one should not get, driven by seeing these huge listing gains or oversubscription figures. IPO still continues to remain, one of the most risky asset classes, because if there is a company which is already being traded on the stock exchange in the secondary market, you have a whole wealth of data, information, disclosures which are available about it. But an IPO is from an unlisted company and still very little is known about it. So my word of caution to retail investors, and especially first-time retail investors, would be to, from a valuation perspective, look at where the institutional investors are participating. And also, at the same time, look at, the promoters, the governance aspect of the company before they really put in their money. Till that time, they would be better advised to invest either in already listed companies or better still the mutual funds which are there.
Right. Pranav, just wanted to get in your take as to, what do you think, the kind of enthusiasm that we've been seeing for a lot of these recent IPOs reflects in terms of improved sentiment, do you think, excess liquidity as well? Would you attribute it to those factors?
Well, yes. I think, unfortunately, what you're seeing in the secondary market and what's really playing out in the real economy, are not like situations. You are seeing a lot of pain in a majority of the sectors in the economy, but the markets are not reflective of that. I think as a result of, low interest rates, excess liquidity, you are finding, all of that money getting channelized into the markets and also into the primary market because of it. So I do not, I do not see it really sustaining for a long time, because at some point the market will catch up with the real economy.
Okay. And, any factors that you think people should keep in mind while, looking at IPOs in terms of factors like financials, management, track record, etc.? What do you think would be crucial to keep in mind for investors?
As I said earlier, for retail investors, from a valuation perspective, one is to follow the cue from the institutional investors. Two is also look at, some of the other listed peers, companies in the same sector, same industry, and what is sort of the valuation that they're trading on. Three is to look at very closely the promoters, what is their background, what are the governance, aspects of the company. So I think these 3-4 key parameters, retail investors do need to keep in mind before investing in IPOs. And finally, as I said earlier, that, it is very easy to sort of get into the rush of things, given the sort of listing gains that you've seen. You yourself mentioned that, you had an IPO which gave more than 100% return. So my, advice to retail investors to be cautious and, evaluate each IPO on its own merit before putting in their money.
Appreciate your time. Thanks very much, Pranav, for giving us a view on the IPO frenzy, what investors should look at, as well as your outlook on some of the recent listings.